We were really excited to see, I think Nationwide was the first to go sub 4% with a 3.99 on the 60% LTV. In literally the space of a week and a bit, 6 others or so, I think I counted in total, have come down. And actually that kind of bottom, the lowest rates available now, I think coming close to 3.78.
I've got a donut friend of mine that's just got divorced who I spoke to before I went on holiday, and he was asking me for my advice about whether to rent for a couple of years and let the rates come down, or whether to buy now and take the bite. Buy now, do a 2-year fixed on the mortgage, get in while it's a level market, and in 2 or 3 years' time, the amount of rent that you would have spent.
You know, when we saw the news articles coming about what Scotland are doing with the rental side of things, a lot of doomsday, opinions on that, saying the rent controls won't work, when actually investors are obviously buying into it.
Welcome to the Investors Corner podcast. Myself, Ian, got Ves, guest with us today from Mortgage Tribe, resident guest, and we've got Andy as well. We're going to cover quite a few bits actually today, so listen in if you're interested to know what Rightmove's saying about the property market. Obviously they've got a fair bit of data, shall we say, in the UK. So is it up, is it down, what's going on with buyers, what's going on with sales? So we're going to share that data with you. What is the fastest selling property according to Zoopla in the first half of 2024? What is that? Take your guess now and we'll tell you in the podcast later on. And Scotland. Why is Scotland significant to property investors in H1, the first half of 2024? Covering
Nice.
that as well as obviously Ves getting you on to talk about mortgage rates, because I saw in the press today, industry press, that I think there was about 5 or 6 key banks that are now offering sub 4% mortgage deals. I'm sure you've got to jump through some hoops to get them, but they are there, and probably a sizable deposit or slice of equity to get there. But it's a step in the right direction, isn't it? I would say, to see the rates going that way.
Yeah, definitely. I think we were really excited to see, I think Nationwide was the first to go sub 4% with a 3.99 on the 60% LTV, and in literally the space of a week and a bit, like you mentioned, like 6 others or so, I think I counted in total, have come down. And actually that kind of bottom, the lowest rates available now, I think coming close to 3.78 for certain customers. So
Nationwide making big moves, aren't they? They seem to be sort of leading the way in the cuts, and other lenders following.
Yeah, I think they've always been up there. I think they're I'm going to misquote this. I think they're the second biggest lender. I'm sorry. If they're now the first, I'm so sorry. Because I know obviously they've made an acquisition famously recently, so that will probably help them out.
Yeah.
But without fixating on that too much, yeah, they're great in certain parts of the market, but it kind of swaps at the moment. And where we're sourcing for mortgages on a regular basis, the top dog changes all the time.
Yeah,
And
I know.
it's-
HSBC have always been one to try and throw the cat amongst the pigeons, because they seem to throw a really good deal out there, but there's a real limited amount of people that can get it as a bit of a sort of hook. They love a hook.
You have to think, if you're throwing out some really good quality bait, you're after the best fish, aren't you? You're after only the juicy ones.
Yeah.
So I think rightly, when lenders come out with a really great product, they're probably looking for the really cream of the crop at that point. So it can be a little bit more difficult to get those amazing rates. They are really for a specific target market, but it's worthwhile researching if you're that part of the market, and you can take advantage. If not, there's some really great products out there from lots of different lenders, and they've got quite creative in terms of fixing problems for the market now. There's a lender out there offering a 5-year fixed with a 2-year early repayment charge, for example, and I've got a client right now that product is just perfect for. And when I first saw that come out, I genuinely thought, who's going to take that? Just because the rate was relatively high. But actually, if you compare it to the 2-year rates, pretty competitive. It's not bad. So if you want to stay on that rate after 2 years, you're welcome to. If you want to remortgage elsewhere, you're welcome to. Yeah.
And it's not just we're seeing better rates on residential, we're seeing better rates on the buy-to-let mortgages as well. All right, they've still got their higher sort of fees to get that, but again, you're seeing them come down. So for residential, it's great. For buy-to-let, it looks better. So yeah, what I'm seeing at the moment, it's all quite positive.
Definitely,
Which is good. Something positive to talk about.
Yeah, definitely. And the buy-to-let rates were cheaper than the residential rates for most of the last sort of 12, 18 months anyway. So if they come down a little bit again, that will be positive. I mean, I've got Rightmove's August data. This is like general market rather than just property investors. One thing that did happen, and it always happens in August, is the average house price dropped according to Rightmove. And the reason why I want to sort of just spend a little bit of time on that is because what we see in Rightmove's figures is the listing price of what they put properties on the market for. And because it's August and all the families are on summer holidays, it's not that the UK average house price has dropped by 5,732 quid or 1.5% that 1 month. It's just there's less 4-bed detached houses coming on the market because all the families are on holiday. So it's almost a nothing stat. But they put it out there anyway. So I'll clarify on that just in case the press decide to run with that statistic in a fear tactic, because it's nonsense. But sales agreed are up 16% year on year, which is positive. So 16% more sales agreed. New listings coming to the market are up 5% year on year. And new buyers registering are up 19% year on year. So they're the 3 key ones. There's more coming on the market. There's more sales being agreed. And there's more buyers registering, looking for properties. So that is the kind of Rightmove data. Any of that surprise you guys? Because I was a little bit kind of like, wow, that's actually 3 quite chunky bits of statistics. But obviously, Ves, you're talking to people looking to get a mortgage at the moment. Are you finding more first-time buyers, more people looking to sell than maybe just the remortgage stuff that have maybe been going on 6 months ago?
First time buyers for sure, yeah. And actually, to just go back to what Andy said and buy to let rates, there's quite a chunk of buy to let mortgages that have been sat on the SVR for a little while, where people haven't borrowed a lot of money necessarily. So that increase hasn't really made them think, well, I need to go and urgently address this. But it's just been something that's been eating away into that monthly net profit. And now we're having people come back in and say, okay, rates are a little bit more realistic now. Let's have a look at fixing something again. First-time buyers for sure, and first-time buyers seem really motivated, even in situations where it's kind of touch and go, borrowing right at the very top end of affordability. The ambition's there. People aren't really put off by asking for the absolute maximum available. And deposit sizes have been quite healthy. So I think Bank of Mum and Dad being the 4th biggest lender, I might misquote that again. I think Bank of Mum and Dad is the 4th largest lender in the UK. They're obviously forking out money. So people are coming in with a reasonable size deposit, good incomes, and a little bit more clued up about mortgages than they would have been about a year ago. I think because it's been, you have to get that record cleaned up before you apply for something. So yeah, definitely.
Did you see the controversial statistic about the Bank of Mum and Dad last week?
No, go on, tell us.
The gender gap.
Oh, sons being lent more.
Sons get 15 grand more from the Bank of Mum and Dad on average than daughters.
Is that because daughters are better at saving and they need less?
Yeah, maybe. Who knows?
I don't know the answer.
I don't know.
I don't know. I mean, I've got 2 daughters, so there is no gender pay gap with or Bank of Mum and Dad with mine when they grow up.
But I mean, here's an interesting thing: the chances are that you would lend them a little bit of a different amount depending on what they're looking to buy. I don't know. There's probably a very good reason for that out there. I very much doubt that parents are going to be quite so biased. Maybe they are. I don't know.
Well,
I'm not a dad yet, so
we're a split family. So there's me and my brother, and then there's my 2 stepsisters that have obviously become a blended family, if you like. But my mum and my stepfather, when we all got on the property market, we were fortunate enough that they all lent us a small amount of deposit to help us get on the ladder. But it was all equal, even though I bought down south and my stepsister bought in Sheffield, which I thought maybe it shouldn't have been equal. But hey, it is what it is. It is what it is. It was her decision.
In the house price.
It was her decision to go up there. But yeah, it was all equal. But that was a little controversial stat that I heard on the radio that was being banded around last week. So yeah, Bank of Mum and Dad, fourth biggest lender as per Ves Doctorov, Mortgage Tribe. You heard it here.
Lowest rates as well.
Lowest rates, yeah. Most of the time it's interest free.
I think with those stats that you've just said, they don't really surprise me, because I think people are just fed up with waiting for things that potentially might happen when they're not going to happen, and people are just getting on with their plans now. You know, we had people 12 months ago saying that they were going to hold out to see mortgages go back down to around 2.5%, which probably isn't going to happen. So I think they're just getting on with things now. So I think there's been more activity, more people wanting to move. We had people potentially holding out to see if they were going to do anything on stamp duty again. That hasn't happened yet. So again, that's just another thing that they can't be bothered to wait for to see if anything happens with. Yep. And they're just making a sacrifice and going along with it now. So yeah, I mean, those stats don't really surprise me.
But to add on to that is that the longer that you wait, I mean, naturally it's kind of a balance, isn't it? So the higher interest rates are, the more throttled the property prices are going to be. As those interest rates start to come down and the appetite for borrowing increases, and the capacity for borrowing increases, then those prices are going to start to creep up. So there has to be a calculation made for every buyer of, if I wait until next year, if I wait until the year after and I save another £10,000 and I'm able to save £100 on my monthly payment on my mortgage, okay, but what a house price is going to look like then? And I think people are starting to think, all right, I could be paying off that mortgage for 2 years and be living in my own house. So there's a lot of people that would be feeling very uncomfortable doing it, but actually making a calculation to say, still better to do it than wait.
I think so. I mean, you take the snapshot of those figures and you say, right, there's 5% more listings than this time last year coming on. And bearing in mind the last few years, we've all said there's been a shortage of properties available to buy, and there's 16% more sales being agreed. So there's still an 11% swing to say that there's going to be less properties available for people if that statistic continued across 12 months. I've got a donut friend of mine that's just got divorced, who I spoke to before I went on holiday, and he was asking me for my advice about whether to rent for a couple of years and let the rates come down, or whether to buy now and take the bite. And I said, buy now, do a 2-year fixed on the mortgage, get in while it's a level market, and in 2 or 3 years' time, the amount of rent that you would have spent and the difference in the house prices in 3 years' time, you're going to be way better off buying. And just stay at home. He's moved back in with parents, which is what he doesn't want to do, but just stay there for a couple of months where you do that. I got back from holiday and he's rented somewhere, so that's what happens when 20 years worth of advice is given and you don't listen. Don't ask me again. Well done, you. So I said Zoopla, fastest selling property in the UK. What's quite interesting is across all the regions, this is more or less the same in every single region, this property type, other than in the southeast, where it's different. So in the northwest it's different, and in the southeast it's different. But everywhere else that you look, Wales, blah, blah, everywhere else, it's all one of these. What do you reckon it is, Andy? What type of property? How many bedrooms?
3 beds.
Okay. What type?
Semi-detached.
Okay. What do you reckon, Ves?
I'll just be different and I'll say 3-bed mid.
Okay. Well, it's a 2-bed terrace. And it's pretty much 2 beds everywhere around in the country, other than the northwest, which is a 1-bed flat. So it could be a 2-bed terrace or a 2-bed apartment. But in the southeast, it is a 3-bed semi.
Is it?
The only place it's a 3-bed, which shows the first-time buyer appetite, shows what we're seeing with first-time buyers, and it shows that the 2 beds are the dominant part. Because if you'd have gone back to, let's say, when the stamp duty holiday had kicked in, all 3s and 4 beds, all 3s and 4 beds. But 60% of 2-bed terraces in the UK are under offer within 30 days. And in the southeast, 51% of 3-bedroom semi-detached houses are under offer within 30 days. So we've always said, haven't we, on this show, that 3-bed semis would be our ideal property investment for all the different reasons that we always explain. And It seems to be in the southeast. It's the family region where that happens. Even in London, 2-bed terraces, which surprised me as
That's
well.
odd.
It's quite similar to the rentals market as well. You know, when you get a 2-bed house that comes on the market, it's like wildfire. Everyone wants it. So again, that's probably the most in demand on the rental side of things. I
suppose it's one of the most versatile, isn't it?
Yeah.
Types of properties, especially if you've got a garage and a driveway,
Oh,
garden. It's versatile enough. If you've got the right construction type to maybe go up into the loft and add the 3rd bedroom, or convert the garage and add a 3rd bedroom, and it's cost effective it doesn't surprise me. But yeah, I think the 3-bed semi's always been the real golden goose of the southeast property market, hasn't it? That's always been 3-bed semi.
Yeah, whether it's a 1930s build or whether it's a 1980s build, those 3-bed kind of semis are just go-to.
On the newer developments now that are being built by big developers, they don't tend to do the 2-beds anymore, do they? It's majority of it's
really.
3, 4, 5
coach houses, over a garage or over an archway to park in, but not really 2-bedroom terraces, unless you go into the sticks a little bit more, and they're more like Muse sort of vibey type properties. But not really.
Yeah, don't see many of them about.
Townhouses, aren't they? That's the footprint. So you get your bang for your buck. It makes the average house pound per square foot look cheaper because you've got this like wasted middle room, reception room that no one's able to use. But the kitchen's lovely, and you've got massive bedrooms with en-suites upstairs. But, it's kind of, that seems to be the go-to at the moment for the new build developers. This was an interesting one. I thought I'd bring it out there. I appreciate I've not, this is like me just throwing this at you guys, so we're not looking for necessarily an educational opinion on it. But Scotland versus England. So in the first half of 2024, if you take a 10-year average of property investing in the UK, it's 25% down in the first half of 2024 across a 10-year average. No surprise. We're talking about landlord exiting, tax. It's very difficult to buy property investments in the UK, especially with the interest rates being up and the stamp duty, etc. However, for Scotland, 30% increase, which that sparked me, and I was like, well, what's going on there? 770 million pounds worth of investment in Scottish property investment in the first half of 2024, and like I say, that's a 30% increase on this time last year. London is down 46% on the 10-year average, and I was just like, what's going on there? Why is that the case? Because it's very clear that the Scottish rental market is geared more around the way I think the English rental market is going. There's caps on rent increasing on tenants. It's geared around protecting the tenants a little bit more. You can't issue a Section 21. You have to give a valid reason why you get a tenant out, which seems to be the way Labour will take it in England. But what was quite interesting was to buy. If you buy at 145 or below, £145,000 or below, there's no tax to pay even on a property investment in Scotland, and it's 2%. It's not a stamp duty. It's called the Land and Buildings Transaction Tax up there. It's the equivalent of, but that's what it is. It's 2% up to 250, which round here you've got to pay your 3% plus what the actual stamp duty tax is. I don't know if that's the reason why, but it's a lower barrier to entry, and you've got Edinburgh and Glasgow and places like that now that are globally, iconic cities that potentially are cheaper to buy properties and cheaper to actually purchase properties.
That's what I was going to say. Probably cheaper to buy properties over there, isn't it? You're going to get higher yields on your returns from the monthly rent. So from an investor's point of view, it makes total sense, because I could probably get 2 properties up there compared to 1 property down here. Like you said, you've got that bracket of where you pay no tax. So why wouldn't you do it? Yeah. If you've got that money. So that doesn't surprise me that it has been such an increase. And then you look at London, where it's 46% down. Well, look at how much it's going to cost you to get a property there. All right, the rental return will be amazing. Yeah. But you've still got to fork out and find the cash to get that property.
If you're buying at 550 in London, for example, with the 3%, with the stamp duty, that's a lot of grand, a lot of £1,000 bags going into that. Whereas, you know, you could go and get yourself something at 225 grand just on the outskirts of Edinburgh, for example.
Yeah.
Rental probably be quite strong, and it's a 2% tax to pay on it. You know, we're used to that, aren't we? So
Yeah.
just thought that was quite interesting statistics. That was a little article that I read. So maybe we try and get someone on the podcast that knows the Scottish market a little bit more. Maybe get one of the estate agents up there.
It'd be interesting to talk about, because you know, when we saw all the news articles coming about what Scotland are doing with the rental side of things, there was a lot of doomsday sort of, you know, opinions on that, saying the rent controls won't work, this won't work, this won't work. When actually investors have obviously buying into it because they're still investing in property and renting out the property. So just
the thing for me, I read up on it a little bit more after I read that article to find out why. I read for about 16 minutes and the Scottish rental market was black and white to me. It was pretty clear. Like I knew. Whereas in the UK, it's a bit like,
what's going to happen? What's going on?
How does it work? What can you do?
Yeah.
You know, how's it favour tenants? How can you get someone out? Can you not? It's pretty clear. It's like these are the rules. This is what happens. A bit like shaking hands on a Scottish property. You know, it's done.
Yeah.
Whereas in the UK, you know, it's not done. So it was a bit more simple, and maybe that's the appeal, which is interesting. What's sort of changing from the blogs and the data and the reports that's out there, just from your guys' point of view? I've been away most of August, but how do we feel about everything since the election? You know, we've obviously had the base rate drop, which is great. We spoke about the mortgages. How do we feel about, let's call it, the sort of third of the year, if you like? We've got that 4-month bracket now, haven't we? Typically speaking, September, October are phenomenal months for the property market. There's a lot of activity. Kids go back to school next week at the point of this airing, which means normally you see valuations go through the roof in the first 2 weeks of September. Sales just bonkers in October, and then you get the mad dash of everyone trying to get exchanged before Christmas on the old pipeline stuff, not the new stuff. So do we think the same thing will happen this year like it normally does? Do you think something different? What's the kind of vibe that you're getting from talking to landlords and buyers? For you, Ves, talking to buyers, go to you first. What's your sort of vibe?
The vibe, I feel, is one of the first times being involved in the property market where I feel like I've been through this before. So I came into this industry off the back of the last recession in 2008, and then, if you remember, and that's actually when you and I met, but if you remember what the market was like, it was difficult, it was slow, it was sludgy, it was, people were just sat on the market for a little while, and then there was this kind of like slow improvement until the point where the market was a little bit more fluid, similar to how we are now. Prices weren't stagnating and potentially creeping up. All right, ignore that asking price statistic for a second, because that is just an asking price. Listings have gone up, people are moving, interest rates are coming down. Again, that's something that was different from back then, but it's the same sort of feeling. And I remember speaking to people back then, and the conversation was like, oh wow, I'm going to move because my property is always going to have a ceiling price on this road, and that ceiling price just ended up getting blown out of the water. So there was people saying, oh, I'll never get more than 170 for my 3-bed in Great Holland. And actually, I mean, it's probably
375.
Yeah. So, but there was that kind of feeling of like, it's difficult to imagine what it's going to be like next. But the property market's been so resilient, and with such high interest rates, that it's difficult to imagine how, as you start to walk those interest rates back, there isn't some kind of increase. For good or bad, right? I'm not going to comment on that, but it does feel like we're at that kind of stage again where we just need to be prepared to shift what we think is possible in the property market. I've experienced this before, and it feels the same. The vibe is the same to me, but the people coming into the market now, the first time buyers, haven't experienced this before. So it does feel like there needs to be people watching these kinds of podcasts. There needs to be, if you're going to be involved in the property market, watch something, listen something, spend a bit of time listening to people that have been in the market, involved in the market for a long period of time, because there is a feeling that things are changing. Whether or not Labour are going to sort of stick their fingers into the property market too much. It's impossible to tell. I mean, the public finances, famously, they've been talking about this £20 billion black hole, and government spending was like £3.5 billion in July. So I don't know whether or not they're going to take the stamp duty and rip it up and do something completely different. But even if they don't, the feeling is that we're just sort of moving along now. There's a bit of momentum. The train's left the station. So let's see where we get, but just be kind of prepared. Positive, in my eyes, it's moving. It's not stagnant, but positive. So it's just about sharing your experience with buyers at the moment, I think.
Yes, I think with the lettings market, I mean, from what I'm seeing at the moment, I know that a lot of people are saying landlords are exiting the market, and there's a big sort of supply issue out there. I mean, I'm still sort of seeing 10 or over lets a month coming in through us. 70% of that's new business. So there's still a lot of property coming into the market where they weren't landlords before. We're not really getting any landlords of ours currently that are looking to sell the property. We might have had one or two in the past 6 months. But the landlords we've got are continuing to rent their property, not looking to sell. There's portfolio landlords out there that I'm speaking to at the moment that are looking to add to their portfolio rather than sell. So it's all pretty positive, really, from what I'm seeing in the conversations that I'm having with landlords, that they're not really looking to exit the market. Obviously, there are landlords out there that financially can't make it work for themselves because their mortgage rates have increased and their outgoings have increased monthly, and it doesn't always work out for all landlords. But from the headlines that I'm seeing to what I'm experiencing, it's just totally different. We've obviously got things coming into place that Labour will implement at some point, but right now there's nothing sort of in black and white on what's going to come in. There's no deadlines of what's going to come in. So again, people can't make decisions because there is nothing there to base a decision on yet. The only thing that we've heard of is EPC ratings going back to a C by 2030, which was originally in place before. And I think people prep themselves for that and already started to do works at a property to bring it up to that level anyway. So again, landlords aren't really rushing to sell their properties, from what I'm experienced anyway. So I think for the rental market, I think business as normal, carry on as normal. We're still seeing inflation rates at about 8.5%, 9%. Okay, it's not as good as what it was last year when you were seeing double rate inflation on rentals. But what we had last year compared to what we got now, last year was just a hot market because of what happened with mortgage rates. People put their plans on hold. People wanted to go into rented accommodation to wait to see what happens with the rates. So there was always going to be sort of a correction with it. Still getting probably 15 to 20 inquiries per property that comes on. Give you an example, I had a 1-bedroom flat in Basingstoke, 38 inquiries in 24 hours on that. I had a 2-bed terrace property in Shinfield, 27 inquiries on that within 24 hours. A 3-bed property in Bracknell, there was around 17, 18 inquiries on that within 24 hours. So if you've got a property there that you want rented out, you've got the demand for it. The inflation rates are great. You're going to get higher yields. Keep hold of the property if you can. You will get the capital appreciation on the property because the sales market looks better. So house prices, I would assume, would increase over the next 2 to 3 years. So it's a bit of a no-brainer, really, just to stay in the lettings market. If you've got a property to rent it out if you can keep hold of it, because everything is there to make it work. I suppose with the sales stuff, it is whether they do anything with the stamp duty to help first-time buyers or anything like that, and whether they make cuts on that, so more people come out of rented accommodation and now able to afford to buy a property, essentially, which frees up more property to meet the demand of it.
Sounds a little bit to me like they've got a bit more to handle than, like, the property market's okay. It's like as normal as it's been for a while, shall we say. Just like leave it alone.
There's almost no reason to go
just leave it alone for a
Fidgeting
bit.
is there.
Go sort out the other stuff.
Yeah,
you
I mean,
know.
there's massive calls for stamp duty. I mean, I was reading a news article earlier today, and £6.6 billion have been paid in stamp duty so far this year, which is £100 million more than last year. So, you know, you've got people out there saying that the Treasury are, you know, raking it in stamp duty when the buyers are, you know, getting themselves into debt to potentially pay for that stamp duty and purchase a property. So there are calls for it, but again, from the stats you've read out, from what you're experiencing in mortgages, it's just leave it alone.
Yeah.
Let it do its thing.
Yeah.
Don't really need any changes for it.
Ves just got a call from Labour.
It's actually Rachel Reeves.
That's straight from Nationwide saying, no, we are the biggest lender.
No. It's the bank of mum and dad.
Well, I think one thing for sure is when you talk to anyone that's in property at the moment, they feel a lot happier than where they felt 9 months ago, 10 months ago, 12 months ago.
And that's especially with landlords as well. My conversation with landlords 6 months ago was just all negative. It was just, Andy, I'm getting out. I've had enough. I can't do this, And then you're trying to nurture them along, saying, look, don't listen to that. Don't read that. I'm here as your agent. Listen to me, and I'll tell you what you need to do. And now they're in a good position, and you know, earning a better income from their investment property. So it's just ignore all the outside noise. Just speak to the professionals, and you'll be all right.
Yeah. Well, no, good podcast, good stats, good interest. Obviously, Ves, you'll come back on again as our kind of resident mortgage advisor. Always value your opinion. And I think it's a special episode next week, isn't it, Andy?
It is 150th episode.
150th episode. Powerful. So we're going to have some fun on that one. So definitely, if you're not subscribed to the channels, please do. You'll get the notification. Mike will be back. He'll have a little bit of a tan after a nice little trip to the one of the Greek islands. So looking forward to hearing that story. But yeah, we're going to have a good podcast next week. Some great value in there. And if you're listening and you want to know more about, I don't know, Scotland, mortgages, how to properly manage your portfolio or expand your portfolio or get your first property investment, then reach out to any of us. We're always happy to help. And thank you as always to listening to the end.
Thank you.
Thanks for having us.